as they cut, the currency is going to fall. As the commodities go down, currency is going to fall. And if China devaluates the yuan, which I think they will, again, our currency will fall.
Mathan, Happy New Year. Welcome back to Dukascopy TV. It's a pleasure to receive you again.
Happy New Year.
Thank you so much. Okay, so let's jump straight in. And we did see investors come out on top as China's GDP ever so slightly missed estimates. We saw particularly in those high yield stocks, such as the big banks, that real bounce back. Were you anticipating sort of this U-turn in the market sentiment that we've seen over the last few weeks?
Yeah, look, the market's come back a fair bit in the last week and a half. So the Chinese data really had to be pretty bad at that point. We thought it would be pretty close, and it made sense to be slightly weaker. The economy is on a downward trend at the moment, and being that it's slightly weaker, it gives the Chinese government more argument for stimulus and also further devaluation. So in that context, it kind of ticked all the boxes. There was a bit for everyone, and the market pretty much thought that was going to be the case, and the currency moved up, and you saw more of the global guys buying into our banks and Telstras, and that generally supported the market, and we saw the turnaround.
Now, this is something that we've discussed previously, you seeing a February bounce back or recovery for the local share market. Is that something that you still stick by, given these horror story weeks that we've had?
Yeah, I think nowadays with the new technology platforms, information travels so quickly, the moves are quite dramatic. We've had such a big pullback we had probably about a week and a half where the market ran up in December at the end, and then we've had substantial pullback pretty much back even lower. So we've actually gone up, you could have made 20% if you bought and sold at the right time just in 2 weeks. So it's a weird market. So I actually think we probably will have a bounce in the back half of January and early February. I think the markets will have a decent bounce. I expect that to happen globally, because I think the negative, pessimistic view in the market is overpriced at the moment. So I think that'll come through with a bit of short covering. We'll see a pop globally. But I think then you've got a risk off for us domestically. We've got our reporting season running in February. So I'd expect the market to tread water through February. And if the market probably will go up a bit, but I think there's not a lot of upside after that because our growth rates are relatively low. And I think the risk is around March, April that we potentially could have another correction.
Now, obviously, it's been all about that renewed concerns regarding China. We do have the Chinese New Year coming up. Is this going to be sort of a bit of a respite for global markets? And which are the sectors that could potentially benefit the most from this China pause, as it were?
Yeah, look, usually you get commodities weakening into the Chinese New Year, and you'll get the demand coming back after. It's logical. You don't need so much when you're shut down. So that's going to happen. So you probably think some of the commodities will weaken. We've had a decent bounce in iron ore, so probably that'll weaken over the next week or so. And oil, well, that's going down the drain at the moment, and looks like it's going to go even further. So that's probably going to weaken further. I think most of the other commodities, most of the stocks have been smashed a lot. So I expect post-Chinese New Year, I think commodities will have a bit of a bounce. And I think a lot of the resource stocks will see a bit of a bounce in that.
We've seen the local currency, the Aussie dollar, we've seen 2009 lows in recent sessions, holding up around about the 69-cent mark at the moment. What role is the local currency playing for Aussie investors at the moment?
Oh, look, it's dominating the market because every type of bad news hits the currency. And when the currency goes down, the global guys are worried that it might go dramatically, so they're selling out, which hits our banks and Telstra, which is top 4 or 5 of the stocks. So that tends to take the market down. So we've actually been sliding with the currency pretty much for the last 6 months. So in that context, that's going to be pretty big. And I think in the shorter term, we probably will see our currency move up a bit because it's had a bit of a move, and now you've got US growth worries. Probably it's going to outlast the Chinese worries at the moment. So the China data is going to give a bit of stability for China, and then they'll go into a blackout period with the Chinese New Year, where the US data with their reporting season probably will look a bit weaker. So I think our dollar probably will go to 70 to 71 cents, but the overall trend is still down. So I'd expect us to be somewhere around the back half of this year to be in the mid 60s or low 60s.
Wow, that's a pretty steep fall you're noting.
Yeah, look, I think the unemployment data is the only thing everyone's hanging their hat on. And look, there is no way the data was correct, but you have to assume the trend was positive. So you'd assume that the trend was going to always roll over because you've got mining slowing down, which has been happening for the last 6 months. You've got the car industry shutdown coming through starting around the middle of next year. And you've got the housing boom now cooling off. So a lot of the big employment transition from mining has been in the housing sector, which is now cooling off. So we expect the back half, and probably around the middle to back half of 2016, the housing cycle will not be there to support the transition. So when that happens, there is a big void coming. So I think unemployment will get worse. And as that happens, you will see Reserve Bank around, I think probably May, June, they will cut once. And if things deteriorate further, you probably see another one around September. So as they cut, the currency is going to fall. As the commodities go down, currency is going to fall. And if China devaluates the yuan, which I think they will, again, our currency will fall. So all of these things will drag it down.
Mathan, many thanks for the update.
Not a problem.
That was fighting talk there from Mathan, seeing the Aussie dollar falling to the mid-60s and possibly even lower. That is all we've got time for right now, but do stay tuned to Dukascopy TV for all of the latest currency market analysis and updates. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye.